Stocks pick up pace with key indices near day's highs, but choppiness remains ahead of the beginning of the earnings season.
City gas distributors lower prices after the cabinet accepts most recommendations of the Kirit Parikh panel on gas pricing. The policy bodes well for players like GAIL, Indraprastha Gas and Mahanagar Gas.
Tata Motors gains after JLR reports strong sales growth in Q4 along with a healthy order book and expectations of closing the year with strong positive cash flows. Analysts too turn bullish on Tata Motors.
And strong bookings and collections in Q4 drive up Godrej Properties and Sobha. Other realty stocks too gain as fears of higher interest rates recede after the Reserve Bank's pause.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me as always is my co-anchor Pavitra Parekh. So Pavitra, we started on a green note and at lunch hour we have nothing to really worry. Market really looks fueled up at this point, but we have seen a fair share of choppiness ahead of the earnings season as well. So at high point of the trading session, Nifty 50, 0.5% gain and about 50 points above where it started the trading session today. So good showing when it comes to lunch hour. When we look at the mid-cap universe, that's also in line. But what's really a spot of bother is on the flat line with a negative bias is the banking space. So Bank Nifty is flattish right now. Advance decline ratio is in favor of the advances with the exuberance and as well as confidence that is being shown by the mid-cap universe. On my screen, Tata Motors, ONGC, Adani Enterprises and some of the Aditya Birla Group companies like Hindalco, Grasim are doing good returns and gaining in trade. Pavitra.
Oh, absolutely. And, like you said, we are holding up with a good gain pretty much at the day's high right now. But we have been trading in a pretty narrow range, right? Around 50-60 points on the Nifty. That's about it. The Nifty Bank, while it looks flat right now, it has recovered a bunch from the bottom. So it's up around 150 points from the bottom. A lot of the stocks which have recovered include SBI, HDFC Bank, Axis Bank. So there's been a good recovery that's come through in these. I do want to point that out. Real estate is really the sector of the day and, as it was on Thursday as well. So those gains really just piling on. Something like a Godrej Properties, which is up 7% after its update. That entire pack doing well, but we also have lots of cues to track. This is a holiday shortened week. We all know that. But before that, you have the US March CPI, which comes out on Wednesday. Crude prices have been very volatile, so we'll track that. And the big earnings season, starts this week with big tech going first. So that's everything that we're tracking. But let's kickstart the show now by talking about the top story. The government has accepted suggestions of the Kirit Parikh panel on gas pricing. So Sonal is standing by the big wall to take us through all of the details here.
Well, yes, this has come as a material relief to the gas users as the government has accepted Kirit Parikh committee recommendations and has amended as to why gas is and how gas is priced in the country. So let's understand some basics first. India consumes around 150 to 160 MMSCMD of gas totally, out of which 50% or 80 MMSCMD is produced in the country and rest is imported. Out of this, 77 to 78% is the gas under APM or administered price mechanism and rest is non-APM. Out of the total production, 83% is produced by ONGC and Oil India combined and rest is basically private players or JVs. So the change that has come about is in the APM gas pricing. Let's first talk about what was the gas pricing scenario earlier. APM gas prices, they were basically decided on basis of a formula, which is the weighted average price of 4 global benchmarks, that is US Henry Hub, Canada-based Alberta gas, the UK-based NBP and Russian gas. It was revised every 6 months and it was set at $8.57 per MMBTU as per the last revision. Now there has been a change to that. Gas prices will now be announced every 1 month. The prices will be pegged at 10% of international price of Indian crude basket. And to protect the interest of consumers, there is a ceiling to this. The gas prices, that is $6.50 per MMBTU and the floor is at $4 per MMBTU, which is for the benefit of producers. Now it's important to note that ceiling will be maintained for FY24 and FY25, post which this will see an addition of $0.25 per MMBTU every year. Gas from non-nomination blocks of oil and ONGC will have 20% premium to APM prices, and there is no change in pricing regime for difficult fields or any LP blocks. Now, this change was brought about because of the way gas prices moved during the Russia-Ukraine war as the global supply of gas was impacted. This led to prices in Europe going up by 3 times, prices in the US touching new highs of $9 per MMBTU. This led to higher prices in India as well. And that is the reason why CNG prices in our own country and city shot up by 80%. So that is the kind of move that we saw in 2022 as well. Now let's move on. After talking about how CNG and PNG prices went up, that was the reason why the government went ahead and set up the Kirit Parikh committee. But with the new pricing regime change that has come in from here, we will see that the prices have been set at $9.16, that is April 1st to 7th. Post that it is at $7.92 per MMBTU. But again, the ceiling is at $6.50 per MMBTU. This has come in as a big relief to city gas distribution companies. IGL gets around 80% volumes from CNG and PNG segment, MGL at 87%, and Gujarat Gas at 36%. So the first two tend to benefit the most. As a result of all this, there have been massive price cuts by all the players. MGL has cut CNG prices by 8 rupees, PNG by 5 rupees. We have seen Adani Total Gas cutting CNG prices by 8 rupees, PNG prices by 5 rupees. There's IGL which has cut prices by 6 rupees. GAIL Gas has cut prices by 6 to 7 rupees per kg. And this has come as a relief to consumers as well. But for producers like ONGC and Oil India, in the near term, there will be a hit to their realizations, with both of them seeing cuts of around 24% as for brokerages. But of course, in the longer term, it's a positive because of the floor. Brokerages are positive on the entire city gas distribution space. Jefferies has upgraded the EBITDA estimates by 6 to 20% for all the three companies. For GAIL, it will lead to a savings of 1100 crore rupees for LPG segment due to lower gas costs. Morgan Stanley says that not only city gas distribution companies, new pricing mechanism is a positive for producers as well and removes a multi-decade overhang on long-term returns. And CLSA says despite the price cuts, margins will be positive for MGL and IGL, and this takes discount of CNG versus diesel back to 30% and brings back the pricing power. Government's intent to assure $75 to $80 barrel realization also raises earnings predictability for ONGC and Oil India.
All right, Sonal, thanks a lot for taking us through that complete explainer. In fact, this morning we also spoke with Kirit Parikh, so let's listen in to what he had to say.
The APM prices recommendations that we had made were following that it should be fixed within a floor and a ceiling price, and that is accepted by the government. The same floor and ceiling we had suggested, $4 per million BTU and $6.5 per million BTU. I think the consumers will are getting cheaper price for the PNG and CNG supplies. Second measure the government has taken is that it has provided 20% additional money or price increase for gas that is produced by ONGC and OIL.
All right, let's steer towards the auto space now. And Tata Motors is the top nifty mover this afternoon after the total global sales surged over 8% in the Q4 of FY23. Let's take it across to my colleague Sonia Shenoy, who's joining in with what the brokerages are saying about Tata Motors. Sonia.
Well, thanks a lot for that. As you rightly pointed out, very good numbers coming in from Jaguar Land Rover in Q4. In fact, the global wholesale numbers are also looking good. It's almost a double-digit growth that we've seen. Total global sales are up by almost about 8% Within that, the passenger vehicle sales are up by about 10% on a year-on-year basis. But the good part is that Jaguar Land Rover sales have seen a good growth on a quarter-on-quarter basis as well. If you compare it, it's almost a 20% growth that JLR sales have seen. Now, a lot of brokerages are bullish on the stock. In fact, Goldman Sachs this morning has upgraded Tata Motors to a buy. They've also raised their target price from 480 to 550, which implies a 26% upside. Their main reason for upgradation of the stock is that the valuations are looking attractive now. So they say that the stock is trading at 7.5 times PE on FY25 estimates. This compares to their own historic median of around 9 times. So it is cheaper than its own historic valuations. Not just that, BofA Securities has said that the volumes are solid in Q4. There's also a free cash flow beat for Jaguar Land Rover. They can achieve their net debt-free guidance as well that they had laid out by the end of FY24. They maintain a buy with a target price of 475, and they say that the risk reward is favorable at current levels for Tata Motors. Back to you.
All right, Sonia, thanks a lot for getting us all of the highlights there. But the other space that we are tracking is the real estate space, because a lot of companies have released their Q4 updates. We have Godrej Properties and Sobha, which are both surging in trade, like you can see, after the strong Q4 updates that came through. So Sonal is here to round up all of the details there. Sonal.
Oh, yes, it is. For both the companies, they have reported record high quarterly sales this time around. So let me start with Godrej Properties first. Sales value, which is up 24.5% on a quarter-on-quarter basis to come in at 4,000 crore rupees. Sales volumes are higher as well, 25% on a YY basis at 5.25 million square feet. Collections, a big surge on a quarter-on-quarter basis, up by 127%. The good part is that the company has surpassed their FY23 booking guidance of 10,000 crore rupees by 22%. So right now it stands at 12,232 crore rupees. They say they have a stronger launch pipeline in the current year that they've not seen before, and that is something which is exciting the street as well. Additionally, there is a Motilal Oswal upgrade that has come in for Godrej Properties. They have upgraded it to a buy. They say that company has reported a four-fold jump in their sales to 8,000 crore rupees till the last financial year, and this was driven by over 100 million square feet of project additions that the company did. Market share has expanded to 8% versus 2%, and they estimate that company will be able to add 38 million square feet of projects in coming years, and company is also targeting 20% growth in their pre-sales in next 4 years. That could take it to 20,000 crore rupees by FY26. They expect the annual launch run rate to double to 20 million square feet. These are the growth drivers they think is going ahead for the stock. For Sobha as well, it was a good quarter. Bengaluru saw sales flat on a YY basis. NCR saw a dip, but Kerala saw good growth, and that is something which led to good growth this time around. In quarter 4, sales value is up 26% on a YY basis. Sales volumes are up 8%. Realizations too went up by 14% for the company. And as I said, Bengaluru was flat, NCR was lower a tad bit, and Kerala was higher this time around. Company said they launched the first project in Hyderabad, and overall launched 3 projects with saleable area 1.06 million square feet. It's a good commentary and good update, something that the street is liking.
Of course. Thanks, Sonal, for getting us all those details. Real estate stocks doing very well. On that note, we'll slip into a short breather on Business Lunch. But up next, on our special segment, Fin Street, Abhishek will take us through the credit card data for the month of February. Stay tuned.
Welcome back. You're still tuned into Business Lunch, and as promised, let's bring you our special segment, Fin Street, where Abhishek is standing by at the big wall to bring us details of how the credit card segment has really looked like for the month of February. Abhishek.
Well, credit card spends have declined massively in Feb on a month-on-month basis. The card issuances has remained healthy on a month-on-month basis. The decline in spends is on expected line, with a decline in rental payments believed to be a key culprit, as paying rents via credit card now attracts a charge. Let's now take a broader look as to how February has panned out for the credit card sector. Total credit card issued is up 16.3% YOY and about 1.11% on a month-on-month basis. This compares to about 17.5% YOY and about 1.6% month-on-month growth that you saw in Jan 2023. Total spends are up nearly 38% YOY in Feb 2023 versus 45.5% growth that you saw in Jan of 2023. Now, total spends are down 7% month-on-month in Feb 2023 versus a growth of 0.91% month-on-month that you had in Jan 2023. If you compare Feb 2023 and Feb 2022, the spends per card is down 8.1% month-on-month in Feb of this year versus a decline of 4% that you had in Feb of last year. Total card issued is up 1.11% in Feb of this year versus 2.1% growth month-on-month that you had in Feb 2022. So total spends is down more than 7% month-on-month in Feb of this year versus a decline of just 2% in Feb of last year. So clearly, February saw a decline in spends month-on-month in both the years, but the decline is sharper this year. Let's take a look in terms of the top 4 performance. In terms of card issuances, their market share has declined sharply from more than 73% in Feb of last year to right now about 68%. SDFC Bank, ICICI Bank and Axis Bank have lost market share YOY. SBI is the only player to gain market share in terms of card issuances amongst the top 4 on a YOY basis. So in terms of spends, their market share of the top 4 has declined from 73.75% in Feb of last year to right now a little under 72% in Feb of this year. SDFC Bank is the only player among the top 4 to gain market share in spends YOY, that is year on year. SDFC Bank has gained about 193 basis points in terms of market share in spends. This compares to a decline of 358 basis points for ICICI Bank, 20 basis points for SBI and flat for Axis Bank. Let's take a look in terms of per card spends. YOY, the per card spend is up 18.6%. 18 lenders have seen growth rate being better than industry average. Now, players who saw spends doubling or more are CSB Bank, Bank of Maharashtra, Canara Bank, City Union Bank and Bank of India. 15 players saw their spends below industry growth rate, with SBM Bank India and IDFC Bank losing the most. Month on month, industry level, the spends declined by 8.1%. So top losers in spends per card on a month-on-month basis are City Union Bank, CSB Bank, DBS Bank India, Federal Bank, HSBC, Axis Bank and SBI Card. So the key takeaway and outlook. Spends have declined in Feb 2023. Now this may have been led by RBI ruling charges on rents being paid via credit card. Expect the trends in spends to remain soft in the coming months as well. Card issuances have remained healthy and the momentum is expected to sustain. The top 4 are losing market share. This is a big surprise. Consolidation is happening in the sector. Axis Bank's numbers will improve due to Citi acquisition, which will help the market share of top 4 players in the coming months. Now, Bank of Baroda and IndusInd Bank will likely move up the ranks with Citi moving out. Also, credit card spends may get a hit by the recent RBI announcement of pre-sanctioned credit lines by banks via UPI.
Right. Thanks, Abhishek, for an exhaustive research on the credit card space. And that means a lot for the banking and fintech space as well. With that, we'll slip into a short breather on Business Lunch. But when we return, China's military drill near Taiwan continues for the second day following the Taiwanese president's visit to the US. More details on this geopolitical situation right after this short break. Stay tuned. Welcome back. You're watching Business Lunch. A quick look at the market. And yes, from the high point of the trading session, the market has seen some shave off of the gains and some bit of profit taking has kicked in. In fact, ICICI Bank is one of the biggest draggers on Nifty 50 today and has lost some more ground. When we take a look at Tata Motors, which is the best performing Nifty 50 stock today, that has seen some bit of profit taking in the last 20 minutes of trade. Bank Nifty is the one which is performing the poorest, but still on the flat line. So keep an eye out on the market. It has lost some ground, 0.4% up in trade at the moment. We now shift our focus to the COVID situation in the country. India reported 5,880 new COVID cases in the last 24 hours and over 3,400 recoveries were also reported in the same time period. Now on Sunday, the national capital reported 699 cases and 4 deaths with positivity rate at 21.15%. Maharashtra, on the other hand, reported 788 infections, of which 221 cases were from the capital city of Mumbai, the commercial capital. And meanwhile, also mock drills are being held today and tomorrow across India after Union Health Minister Mansukh Mandavia advised the state to strengthen efforts to monitor and also curb COVID-19 infections. Remember, in the meet chaired last week, Centre urged the states to identify the emergency hotspots and also ramp up testing as well as vaccination. So we know the drill. We just have to get more serious about it and be careful, Pavitra.
Oh, absolutely. I mean, at a time like this, it's good that the government has also put out this advisory, right? And we will, of course, keep bringing you the data on this as well. But with that, let's bring you some updates from the world of sports. Viewers of IPL were in for a treat on Sunday as the Kolkata Knight Riders scripted a run chase for the ages. Kolkata Knight Riders seemed to be down and out after Rashid Khan hat-trick saw KKR needing 28 runs off just the last 5 balls to achieve the target of 207 runs set by the Gujarat Titans. With nearly all hope lost, up stepped Rinku Singh, smashing 5 sixes off the last 5 balls of the innings to lead Kolkata Knight Riders to the unlikeliest of victories over last season's champions. So quite a thrilling match, Nisha, especially for you, because I know you definitely tune into all of the IPL action.
Yes, KKR, that match was stunning, but let it not also overshadow what Shikhar Dhawan did, right? Single-handedly took the team along and completed and took it above 100 and gave a decent score and respectable. So very good weekend for people who love sports and especially cricket. Moving on then to some geopolitical tension emerging in the world. Well, China's military drills near Taiwan continued for a second day as they carried out precision strikes around the island, and Taiwan's defense minister reported multiple individual aircraft missions, adding that they were closely monitoring China's missile forces. Now, these drills come on the heels of Taiwan President Brief's visit to the United States, and also China had previously conducted similar drills when U.S. House Speaker Nancy Pelosi visited Taiwan last year. NBC's Courtney Cube gets us the latest on this developing situation.
A massive show of military might off the coast of Taiwan. China deploying fighter jets and warships Saturday, sending 71 planes into Taiwan's airspace, and at least 9 Chinese warships now surrounding the self-governed island of Taiwan, simulating a naval blockade. It's the start of Exercise Joint Sword, 3 days of military action that Beijing says is a serious warning.
This is their way of trying to intimidate.
The exercise is in response to days of high-level talks between the U.S. and Taiwan, beginning with President Tsai's meeting with House Speaker Kevin McCarthy in California. Hours later, a congressional delegation arriving here in Taipei for 3 days of engagements.
It is important that all democracies stand together against tyranny and oppression.
President Tsai saying Taiwan has faced continued authoritarian expansionism, making cooperation among democracies even more important. Chairman of the House Foreign Affairs Committee, Congressman Mike McCall, vowing to deliver weapons and training to Taiwan's military.
We will provide training to your military, not for war, but for peace.
China's response so far more muted than their actions after then-Speaker Nancy Pelosi visited last summer, when their drills included firing ballistic missiles. But the tensions between the U.S. and China higher now, this military show of force causing concern in the region and beyond. Today, Taiwan pledging to respond with a calm, rational, and serious attitude. Meanwhile, China not showing any signs of backing down. Congressman McCall stressed Taiwan needs weapons to deter and, if need be, defend against a Chinese invasion. But with about $19 billion in weapons meant for Taiwan now backlogged, many of those systems won't arrive here for years.
All right, that is the latest on the China-Taiwan issue. We'll keep bringing you all of the details. But with that, we're going to wind down on this edition of Business Lunch with the news that the markets are holding up just fine. Thanks for tuning in. Midcap Radar is up next.